I'm Todd Johnson, and this is Earlylands in Conversation. Our topic today is a deep dive into the global mining industry from the perspective of one of the leading legal experts specializing in the sector. Rebecca Campbell is a London-based partner at law firm White and Case, where she leads the firm's global mining and metals industry group. Rebecca has advised on a wide array of project development and financing deals, notable mining-focused M&A transactions, and regulatory reforms in a number of global jurisdictions. She is a true substantive expert on an industry that is playing an ever more important role in geopolitics and which will underpin everything from the rise of AI to the green energy transition. We're pleased to welcome Rebecca Campbell to Earlylands in Conversation. Rebecca, thank you very much for joining us today. Are we catching you in London, I presume?
We are. Thanks for having me, Todd.
This is a conversation I've been looking forward to for a long time. And, we talk a lot about the mining sector here on the podcast, but it's either with producers or sort of journalists and others. And having you come on board to talk about it from the perspective of boardroom, the deal room. Let us jump in. A first question. I think it's always important to open these discussions with a scene setter question. And I'll put it simply, and sounds like an oversimplification, but hopefully I can clarify it. Tell us how to think about the global mining industry today. And I ask that in the context that most people, if they follow the industry at all, are exposed to pretty breathless headlines about critical minerals or rare earths, which aren't actually that rare, and demand forecasts that are pretty eye-popping. You have a bird's eye view of the industry, looking at it from the context of M&A, regulatory trends, taxation, et cetera. How should someone who isn't inside the sector, how should they think about the mining industry today?
Okay, well, it's a great scene setter, Todd. So what I always say about the mining and metals industry, and it's obviously an industry that I've devoted my professional career to, so I've been fascinated by it, for my entire professional life. But the question is why? And one of the reasons I always say is that the sector is at least 100 industries in one. And there's so many, the nuances of each commodity, of the way in which each commodity is mined, extracted, processed, the way in which each commodity is mined, extracted, and processed in each country, the way things are moved around the world. It has this really sort of fascinating confluence of land, people, national, resources, global politics, local politics, plus the markets associated with the products that are being produced. And so now what that really leads to, though, is we have to be extremely careful as an industry not to get so bogged down in detail as to not be able
Right.
to, step back at times and really look at the big picture about, what is the future of the sector, what's driving activity now and into the future. And that, I think, is why a conversation like today's conversation is a really important one to have.
Now, that's a great way to put it. I like that sort of industry upon industry upon industry, right? It touches on so many things. And, I know the industry is very keen to recruit young people into it, and hearing you describe it like that is a great way to sort of demystify it and say that, that you can have a million different careers in the mining sector. Let's go a bit deeper into a topic that, a lot of people hear about because it does generate headlines. That's critical minerals. And I'm sure it's something that you pay attention to with your clients. But tell us what makes them so critical and what are the demand side factors that have pushed them in the headlines?
So the fascinating thing about this is that everyone's definition of critical is different, and
Right.
we actually published quite recently in one of our articles, like the periodic table, where we tried to color code according to like different countries what each of them designated as being critical. I think critical minerals is the latest moniker for a discussion that we've been having for generations, which is really about how do we articulate how essential minerals and mineral commodities are to, the future of global progress. And critical minerals is the latest incarnation of that. I think it's been very important because it has been by adopting that moniker, it has enabled the industry and also a number of governments around the world who are interested in this conversation to raise the profile of mineral and mineral supply chain shortages up the
Right.
global agenda,
Right.
both from like a markets and a geopolitical perspective. But what it really does mean is, what's critical to the US is different to what's critical to the EU and different to what's critical to China. And the drivers of that definition, critical, have also changed very much in the last 6 to 12 months. So the first thing, say if we were having this conversation 12, 18 months ago, the discussion around critical minerals would have been heavily focused upon what minerals are required to supply the energy transition.
Right.
And that would have been the sole part of the conversation, essentially. So if you look at, for example, the EU, which is a relatively early, one of maker of some of the earlier um, announcements around this, others have definitely caught up in the meantime. The EU's initial list of critical raw materials and the initial list of critical strategic raw material projects, for example, is heavily focused on energy transition.
Mhm.
What's changed in the last 6 to 12 months is the conversation has also become about the minerals that are required to secure a nation.
Right. Right.
And there's
More of a
two parts.
strategic sense to it.
Strategic, right? And there's two parts to that. There's the narrow part of it, which has been getting a lot of attention, which is around minerals that are directly relevant to the security of a nation, as in the physical, and cybersecurity of a
Right.
nation. But then there's also a recognition that other minerals, whilst they may not be required, directly for the defense sector, are essential to secure the economic prosperity of a nation, and also that they need to be independently sourced.
Mhm.
So the classic example there is rare earths, where, this is all sort of very well known at this point in time. And you see rare earths kind of, they've been floating around on the agenda for a number of years. But, now you could speak to anyone in the sector and they will tell you over 90% of rare earths are processed in China. And in
Mhm.
some instances, it's 95 to 97% of the relevant, element. And China's recent ban on rare earth exports, or much more significant controls that have been put on rare earth exports, has really elevated this into the limelight around the need for other nations around the world to secure their access to rare earths. Now, rare earths do have some defense applications, but a lot of their applications are more general to the requirements for industrial production.
And would you put in that first bucket the energy transition minerals that you were talking about? Copper, lithium, cobalt, right? And those
Nickel.
continue,
Yeah.
nickel, of course, right? I mean, they are still as relevant today about, global copper supply being, copper is in everything, right? And that
Yeah.
remains as pressing as it was 18 months ago. But like you're saying, that has transitioned from just being a green mineral to a strategic critical mineral for national security, right?
Exactly right. Now, I don't think it's changed a lot in practice in terms of the actions that are being taken to support additional copper production globally. I
Right.
mean, maybe when we can sort of get into it in a bit more detail, one of the shifts we are seeing as a result of the most recent US policy announcements is a shift towards fostering domestic production within the US itself, which has really not featured as part of the global supply side discussion, for a
Right.
generation. And so that is a significant shift, but copper itself remains omnipresent. And again, I'll come back to my point. This industry is 100 industries in one,
Mhm.
because we could go through, we could be here in 3 hours time. We could go through each and every one of those minerals and explain how the conversation has shifted over the last, 6 to 12 months. So lithium, just give you one more example. If we are not transitioning as quickly in the energy transition, and in particular, if the uptake of um, electric vehicles is going to be less than was previously anticipated as a result of changes in policy and also potentially just global economic sort of slowdown, then lithium uptake will be less than was anticipated. And whereas that's different to copper, if you know what I mean. So
I mean, that's actually a nice transition into an interesting conversation you and I had last month, in which we were discussing these key trends impacting the industry, but particularly those that aren't drawing the headlines, right? And we were talking about processing and smelting,
yeah.
which, on the minerals value chain are maybe slightly less sexy. I don't know, because, they're just more mysterious. But you said that there are trends that we should be watching there, that aren't making the headlines. What is it about processing and smelting that is drawing your attention now?
Okay, so a couple of very, very prominent examples of this at the moment, but this is where China has very successfully built out its production capability over the last generation to the point where it is the global preeminent minerals processor. When we come to rare earths, we'll start with them. Come to rare earths. Rare earths, as you said in your introduction, they're not that rare, but China has over 95% of the processing capacity for rare earths. There are, prominent mines in OECD nations who have to send their primary
Right.
production to China for it to be processed, and at this point in time, it's unclear whether they can get it back at the end
Right. Exactly.
because of
Right.
the export bans in China.
Right.
When you go into copper smelting or base metals smelting and refining, here you see China having built out such extensive processing capability that at the moment, what we call the TCs and RCs, so the treatment and refining charges that a smelter, traditionally would get paid to process, say, a copper concentrate. At the moment, well, in recent months, those margins have actually gone negative. So there is an oversupply of copper smelting capacity, but it's concentrated in China. And so you've seen other, non-Chinese players idling smelting capacity around other parts of the world. We then also have, a number of governments around the world actively pushing for the build out of copper smelting and refining capacity in their countries. And so the question there is why? And the answer is pretty obvious. That is not about making money. That is about securing the supply chain. And in fact, you see that if governments outside of China want to control more of the global copper supply, then they effectively need to underpin and strategically invest in processing and
Right.
capacity. And we're starting to see that play out in different commodities the world over.
Right. Yeah. The financial case is secondary to the strategic case.
But if you're a private sector party, you can't be expected to
Right.
go and build a loss-making smelter, right? So
Yes,
you
exactly.
need to. This is when we start to get into the conversation about all of the, strategic support that governments are starting to provide. Well, governments outside of China are starting to provide to the sector.
And
China has invested for over a generation in providing that support to the sector within China.
that leads to my next question then. So over the past generation or so, why haven't you why has all of the processing and smelting been so concentrated in China? Is that just purely because the demand has been driven by Chinese markets for so long? Or is it licensing and environmental concerns and such in OECD markets that have made it less attractive?
Yeah, interesting. So I think it's a combination of all of those factors, but the single biggest factor for me has been the strategic and systematic investment in the sector by China through its massive growth phase. So, it started obviously, and we don't talk about it as much these days because it's a little bit, less front of mind, but obviously started with a massive investment in the steel sector in China and then
This
sort of
is kind of
progressed.
mid to late 90s, early 2000s,
Yeah, and
right?
has, progressed through to the minerals that we're more focused on today because we've kind of reached peak steel
Mhm.
or are very close to reaching peak steel. And so where the rest of the world is, decades behind at this point in time in the investment cycle, I think again this is where we see different programs starting to be talked about and so on through especially the EU and the US, but they're only just starting to move from concept to reality. And in fact, I think probably the most interesting conversation for you and I have to have in, say, 12 months' time will be a much more about how have those concepts translated into reality? Has this just been, political rhetoric, or will there actually be substantial investment into the sector? We're starting to see that the actions in the US that have followed the various executive orders coming out of the Trump administration do seem to be starting to result in real change on the ground in terms of how long, expediting the permitting for projects,
Right.
certainly allocating human resource within the large financing institutions like DFC and USXM and others
Right.
towards the mineral supply chain. But it's a little bit too early to tell now whether that's actually going to translate into real money into projects and real projects getting built. I think one of the other really obvious points is that where there's existing,
Hmm.
processing and refining capacity that remains in Europe and the US and other similar countries, it's also quite important to not lose that
Right.
capacity. We have a number of operating refineries and smelters and so on around the world that at the moment are kind of, let me call it creaking due to underinvestment. And to me, that they are in the same way that a lot of work has been done to transition some of the big steel production sites around the world over towards green steel, to me that remains that is also a potential kind of low hanging fruit for the sector in terms of fostering smelting and refining capacity or processing capacity more generally.
Brownfield sort of investments that could boost productivity and such.
Yeah, and those sites are already there. They've already been built in such a way such that hopefully, their impingement upon local communities is less. It's always easier to start with a brownfield site.
Well, we've started a little bit back to forward in terms of the value chain, right? Talking about smelting and processing. Let's go to the producer markets. Most people are aware of legacy mining markets that have played an outsized role in defining the national economy, national identity, even. Australia, South Africa, Chile, mining is part of the DNA of their economies and their workforce. Give us a sense of some of the newish or lesser known producers that you think that we should be aware of that may be the next South Africa or the next Chile.
So I think to answer that question, we start with where the two things. Where are the mineral resources if we're looking at primary production, and where do the sort of geopolitical factors to encourage primary production exist? And in some time places we have varying combinations of them. So places like Kazakhstan or the DRC often talked about as having very significant mineral endowments. Both nations sort of seem to be at the moment balancing US and Chinese investment, and because they have such a wealth of mineral resources, both are able to attract quite a lot of, new exploration and growth expenditure. But you counter that where you sort of see political uncertainty around doing business in countries outside of the OECD. I'm not picking on Kazakhstan and the DRC. I'm just using them as examples, but
Right,
in that they have the mineral endowments, but they both do suffer from political risk considerations as well.
right.
And you see examples like the DRC in recent months having announced effectively a mandatory dividend for projects in which the government has a stake, which effectively mandates higher cash returns to government rather than further investment into the sector
And then
by the
also
owners.
the cobalt, the sort of the prohibition on export of cobalt, right?
Exactly.
Which
Those sorts, exactly. Very significant political risk factors that need to be taken into account. But then you can also look at some other nations who've taken a very, not necessarily known like the DRC or Kazakhstan for having, mineral endowments,
right,
who've taken a very deliberate approach to positioning themselves as the future of the mineral sector when they weren't previously
right,
considered. And obviously, the most obvious example for me there is the Kingdom of Saudi Arabia. They decided 8 to 10 years ago, they decided that mineral resources were going to be, the third pillar of
right,
the industrial economy.
right.
They invested in a regulatory regime. They invested in capacity building. They've invested in exploration because the country was large, huge country, largely underexplored. They've invested in, the national mining champion Martin.
Exactly.
They've brought Aramco into the sector and have demonstrated a combination of, the willingness to do those sort of hard yards. It's not glamorous to overhaul your regulatory regime. I get very excited about this kind of stuff. I was
There's a
involved in
few
that.
few lawyers in the room for that.
Yeah. Yeah, exactly. Now I get excited about this stuff because I see it as one of the key enablers for, successful industry, but it's not very glamorous, right, when you're doing it the first time. So, like, a lot of those hard yards have been done, and the sector is now set up for
Right.
long-term success. And that's both in primary production and also in sort of that there's very significant efforts being put in right from the outset about building the full value chain in the kingdom and
Right.
not just primary production. And in
Right.
some minerals, they'll look to build processing and perhaps go upstream in due course. In other minerals, they'll focus on primary production first. Again, a very nuanced approach being taken.
Well, that's good public policy, right? I mean,
Mm.
obviously investing in the time and the effort to develop a strong regulatory regime and checking all the boxes like taxation, companies have to see that. And
And
do
to
you
have comfort about the stability of the regulatory regime, because obviously we're talking about massive, like multi-decade investments in most cases.
billions of dollars in 30, 40, 50 years, right? And that takes
Exactly.
a lot of confidence. Just on the Saudi example, Ma'aden, as you mentioned, and then IRH, International Resource Holdings, in Abu Dhabi. Do you see them as basically state-backed mining champions now that are very new in the marketplace, but also very aggressive? I think moving very quickly. Do you see them changing the industry in a dramatic way, or just moving at a pace that's different from a publicly listed company? How do you see them playing in the future? Is it or too early to tell?
No, I think the various Middle Eastern players, I mean, obviously IRH, Martin, Manara, there's a number of others as well who are emerging very rapidly, bringing, a certain, like a lot of energy and innovation
Right,
to
right.
deal making. A lot of the investments they are looking to make are the types of investments which are consistent with the probably preeminent global trend that we see at the moment in deal making, which is around strategic joint ventures. We're seeing a lot less of this, let me call it traditional M&A, and a lot more of parties finding, complementary, but perhaps not entirely consistent objectives that lead them to co-invest. Someone might
Interesting.
have the technology,
Mhm.
whereas somebody else might want to explore a certain part of, tract of land, or someone might have the operational expertise, but not the local expertise. And so we're finding that we're building a lot more of these strategic partnerships or strategic joint ventures in order to bring together, the best bits of each of these stakeholders, their best skills.
Industry is changing, right? It's not just driven by a handful of old line, 100-plus-year-old companies that do business as usual. So I guess maybe a shakeup is good, like you said, being innovative
Yeah.
and aggressive.
Yes, I think that's right. I do think that these sorts of players have always been the driver of a lot
Mhm.
of the innovation in the sector. That the tradition of the sector, which still does actually continue very strongly around juniors and mid caps being the engine room of primary exploration.
Right, right.
That
Edgy
does,
exploration and
yeah,
yeah,
exactly. That does still continue. Obviously, we have seen the majors increase their exploration budgets in recent years, but where they have also increased their investments are around these sort of strategic joint ventures, recognizing that especially some of the majors that haven't been doing a lot of, especially pure greenfields exploration, they might have been
sure.
building out around their existing operations and so on. Those strategic joint ventures are very, very important.
I just spent a couple weeks in Africa looking at two new growth markets on the mining side, doing a baseline assessment for a client. Very exciting, very new embryonic markets. But one thing I kept hearing is that there is a desire, at least at a policymaker level, that they want their countries to be processors, refiners, maker of finished products, like we were talking about earlier. And this is great. Of course, you want to say I want to produce finished EV batteries, opposed to sending your lithium to China. But why is it such a challenge? What's the sort of the simple takeaway why it is such a challenge for new emergent players in the market to say that they can do beneficiation in country, right? Is it cost? Is it logistics? Is it all of the above? When you hear that from countries that want to develop their mining regime and say, we'd love to build a battery plant here, you're thinking, that's going to be hard because.
It's good. Well, I think you always have to start somewhere, is
Right.
what I say in
That's
these
good.
conversations. And you've got to walk before you can run. Now, that doesn't mean you shouldn't anticipate that you might be able to run at some point in the future. Obviously, be ambitious for your country and think ahead. But at the same time, it is, as I say, so important to walk before you can run. A lot of the times we're having these discussions with nations that have no or very little history of mineral extraction. Your very first sort of proof of concept is, can you get phase one of a mine built and the product to market and the revenue flowing in such a way, in such a way that there is growing confidence about investing in that market in the first place. Now,
Right.
if we go back to our discussion about processing and smelting earlier, you heard what I said, right? There's not a lot of money to be made in that part of the sector a
Right.
lot
So
of the
that so
time.
there it's an illusion that they think if we make batteries or if we try to process lithium that there's going to actually be money at the end of the rainbow.
Exactly. So sometimes there is money in that. I'm not
Right.
taking away from that, but at the moment, the major source of investment we see into the processing and smelting sector is much more about securing strategic control of raw
Right.
material of
Right.
materials and not about beneficiation in
Right.
terms because beneficiation embedded in that is like value add. You know what
Mhm.
I mean? Like and an assumption that
Ex-
you're going to make a
Right.
lot more money out of it. And it it isn't necessarily the case. The other thing when we go to the sort of like walk before you can run is that in order to do the processing, in a lot of cases, you need much more significant infrastructure, in particular power and water infrastructure
Exactly.
to support those
Export
activities.
routes, rail lines,
Yeah. Yeah,
roads that can
exactly.
handle heavy trucks.
Yeah, exactly. Now, again, if you're exporting a less processed product, you're probably going to need all that infrastructure as well. But especially the power and water requirements and the technical expertise and
Right.
the people in country to do all of that is can be a limiting factor. The third thing I would say, and it's sort of a corollary of the first thing I said, is that where processing and smelting capacity is being built, it is at the moment largely underpinned by some form of government support. And so if you're a government who's relying upon the revenues from the project to support other crucial developmental goals of your nation, it is very hard to then say, oh, actually, I'm going to take that money and invest it in, subsidizing the power price for the smelter. When, especially if you're in a country with, a lower development base, there's going to be a lot of pressure upon you to spend that money on schools, hospitals. So it's a really, really sort of tough conversation because you would love that, every bauxite, primary bauxite project that got built, you could build a refinery next door to it, but the economics and the politics of it don't stand up. And I'll just add one more factor to this because it's often forgotten in these discussions, which is the importance of the offtake coming out of these projects to supporting their financing, so their debt financing. In project finance world, which is the traditional financing mechanism for these, development projects in emerging markets, the offtake is, especially if it's say a copper concentrate offtake or a rare earth or
Right.
some other strategic mineral, the destination for the offtake is very often it has a very significant link to the financing you can raise. So, for example, if in a copper project, the copper concentrate is promised to the Japanese smelters, the Japanese lenders will come in and provide significant support to that project.
So if you have a Japanese trading house that signs a 10-year offtake agreement, then that opens up all the Japanese
So it's a huge
banks.
enabler of
Right.
the financing.
Right.
And we see that playing out in a number of processes around the world, including right now you know the biggest ongoing project financing in the world, which is being structured for the Reko Diq project in Pakistan. And the offtake there will be very important to the financing structure.
Right.
And if you are then taking that offtake and putting it into a local smelter, you therefore can't raise your debt financing
Right. Because
either.
from a local Pakistani banks, obviously
Yeah,
can't finance that. Right.
yeah, yeah, exactly. So I think that's the final thing to think about when it is a very nuanced debate around, well, is it the right thing to require beneficiation? And that's why I say walk before you can run.
Right.
And the classic example of walking before you can run I think is around what like Indonesia did in the nickel market, in that they they over time introduced the requirements for beneficiation, but that was against the backdrop of already having a significant amount of primary production, and they introduced it over an extended period of time, and they have now moved to a position of you know
Dominating the
dominance
nickel.
in
Yeah.
nickel
Yeah.
processing in Indonesia. So
Well,
there's a lot to be and that's happened over 15 years.
right. It's a good political stump speech to say we're going to build a battery manufacturing plant here, but there's
Yeah,
a lot more to it. And I think that's
yeah, because
as there.
unless you've got the government funds to invest in every bit of that supply chain,
Yeah.
you, you actually can't do it.
Shifting a bit as we kind of close out here. Um, but on the political and the strategic side, right, we have heard critical minerals and mineral security deals be very much a feature of dialogue, particularly out of the White House. Ukraine is open for business, although it's been mining and smelting for decades. Do you see companies actually starting to follow some of these political trends, particularly coming out of the US around strategic sort of minerals for security partnerships? Or is it still a wait and see? Is the industry continuing to move slow, right? Because it requires 30-year, 40-year, 50-year time horizons and billions of dollars of investment.
I'd say it's a bit of both, in that obviously the industry has always had to follow political or geopolitical trends. Otherwise, that is one of the key drivers of just basic demand in the market, right? And governments have always been pulling levers, whether that's, tariff levers, subsidies, grants, you name it, right? Financing support, royalties, taxes, you know what I mean? All governments around the world pull those levers all the time.
Right.
In the last few months, that's why I was sort of saying that the real proof in the next sort of 12 months is going to be whether we start to see a lot of these most recent policy announcements translating into action. And then by
Right.
action, I mean like FID on projects,
Right. Final
project
investment
financing,
decision. Right.
final
Yeah.
investment. Sorry, I'm talking in jargon.
Uh,
Project financing being locked in,
right.
including significant chunks of, government-backed lending support from, the relevant nation or nations. And so those who, work in the sector always have to be extremely attuned to what is going on in global politics. And again, because the sector is so global in its nature, it
Right.
does mean that we need to be across all of the politics, right? And that's why I always start all of these discussions talking about what's going on in China, because
Mhm.
China leads the way, and it's the rest of the world who is reacting to that. There's a tendency, especially when we've had sort of the flurry of political announcements coming out of the
Right.
US and the EU in recent times, to to think that the conversation is being driven by the US and the EU. And they're still
Yeah.
catching up, in my view.
It's whoever's making the most noise does not make the actual decisions.
All of us working in the sector have to be, extremely attuned to this.
That's a great takeaway that know what happens in Beijing before you know what happens in Washington. Last couple questions here. What is it, do you think, that's keeping up the CEOs of Anglo American, Rio Tinto, Barrick, and others? Are there existential worries that they have beyond just the demand bubble will pop? Right? Is it AI based, or what is on their mind that their chief economist is telling them to worry about that may not be generating headlines?
To me, it's this groundswell of regulatory uncertainty. We've touched upon bits of it in today's conversation. We've talked about all the policy announcements being made, but when the tariff rules are changing every day,
Of course.
when the sources of financing are changing every day, when the tax incentives are changing every day, and the executive orders are changing every day, it's incredibly difficult to plan because the sector's mindset has to necessarily must be long term. There are some investments that can rise above the noise because
Sure.
they're such no brainers. So the copper projects we've been, the primary copper projects that we've been talking about at the beginning of this conversation. Some of them are just the no-brainers that rise above all the noise. But there are other commodities or parts of the value chain that have, where just as significant an investment is required, and yet there's just that churn, right, of regulatory uncertainty. And so to me, that is the single biggest risk. And I do feel the level of uncertainty has risen materially over the last couple of years.
Uh,
When you have uncertainty in markets that were traditionally seen as stable, well regulated, markets from a regulatory
mhm.
perspective, it then also ricochets into the markets that were seen as being less stable and kind of gives a lot of those markets license to be extremely unstable, if that makes sense. And so one of the other things that we are seeing is that if it's good enough for country A, then it's good enough for us,
Yeah,
right?
I can shift my
Yep.
dividend policy or my,
Yeah.
taxation
Yeah.
policy overnight,
So that's why I sort of say it's an overall kind of tide that's been rising around regulatory uncertainty.
That's a great takeaway. And I'll put up some of the thought leadership that White and Case has done, and I'll put that up in the show notes as well. Last question. I always ask our guests to recommend 1 to 2 books that will help our listeners better understand their focus area. What would you tell people to read?
Well, a couple of books that I've been giving to people in the last 12 months. So I think
Definitely,
it's
that's
always a
what we
sign of
need.
a good book if you're giving it to other people. So there's a book called The War Below by Ernest Scheider,
The War Below,
which
I
is a
know it.
great
Yeah.
read. And then there's another one called Material World by Ed Conway.
At Conway. So
Also a
I've
great
given
read.
that a few people as well. It's a
Okay.
phenomenal read. I was hoping you would mention that. So The War Below and Material World, which yeah, are
Yep.
eminently readable books. And
And of course, we obviously have been putting a lot out recently around the critical minerals topic, trying
yes,
to make it understandable and digestible for those of you who are not living and breathing it in the exact level of depth that we are.
putting out thought leadership is always that fine balance, right, between salesmanship and just good intellectual capital building. And you guys do an excellent job of the latter. Rebecca, thank you so much. I've learned a ton. I always do when we chat. And so I really appreciate you taking the time to answer my grab bag of questions today.
Brilliant. Thank you for having me on, Todd, and look forward to
Well,
staying in conversation.
and let's do it again in
And
12 months, like you said, and see where we're
exactly,
at.
and yeah, look forward to seeing where the podcast goes.
Absolutely. Thank you so much.
Cheers.